Hey everyone, welcome back to Corporate Decoder, the place where we take a peek behind the corporate curtain and see what is really going on. Today we're diving into the latest report from AGM Group Holdings, Incorporated. And let me tell you, it has got some interesting numbers for the first half of the year. We're talking 6 months of financial performance, and we've got the juicy details to unpack. Before we dive in, if you like getting these unfiltered looks at company filings, make sure you hit that subscribe button and the notification bell. And hey, if you want to join a community of fellow corporate sleuths, our Discord server is linked in the description below. So what is this filing all about? Well, it's a report that AGM Group Holdings Incorporated has to send to the US Securities and Exchange Commission. Or the SEC roughly translated, it means they are a foreign company that sells its stock in the United States, and they need to keep everyone updated on their financial health. This particular report is for the month of October 2025, and it focuses on their performance for the 6 months ending the 30th of June 2025 compared to the same period in 2024. Think of it as a mid-year check up for the company S finances. What we have here in this report are two really important pieces of information. First, there is a document called Management's Discussion and Analysis. This is where the company's leaders explain their financial results in their own words, telling us what they think is driving the numbers, both good and bad. And second, we have the unaudited, interim, condensed, consolidated financial statements. These are the actual numbers, the balance sheets, the income statements, the cash flow statements. It's the raw data that shows us how the company is performing financially. It's like getting both the doctor's explanation and the full lab results for the patient. Now, let's get into the meaty part, the financial performance. The Management's Discussion and Analysis report is crucial because it gives us context. When a company presents financial statements, it is easy to get lost in the numbers. But this document helps us understand the story behind those numbers. The executives will walk us through their achievements, their challenges, and their outlook for the future. We want to see how they explain any changes in revenue, expenses, profits, and cash flow. Are they highlighting growth? Are they explaining losses? Are they talking about new initiatives that are paying off or perhaps underperforming? This is where they reveal their strategy and how they believe they are executing it. We will be looking for how they describe their revenue streams, any cost, saving measures they might be implementing, or any investments they are making for future growth. It is also a place where they might disclose potential risks that could impact their business. And then we have the financial statements themselves. These are the hard numbers that back up all the talk. When we look at these, we are going to zero in on a few key things. We want to see how their total revenue has changed. Has it gone up, gone down, or stayed about the same? A rising revenue is usually a good sign, indicating that customers are buying more of their products or services. We also pay close attention to their net income or profit. This is what is left after all expenses are paid. A growing net income means the company is becoming more profitable. We will also scan for any significant changes in their assets, things they own, or liabilities, things they owe. Are they taking on more debt? Are they growing their cash reserves? All these pieces of information together paint a picture of the company S financial health. Now, let's talk about what this means for AGM Group Holdings Incorporated. Looking at the numbers presented for the 6 months ended the 30th of June 2025 and comparing them to 2024, we can start to see some trends. For instance, if the revenue is up significantly, this suggests that their business strategies are resonating with the market. Perhaps they have launched successful new products or expanded into new territories. Conversely, if expenses have risen faster than revenue, it might indicate inefficiencies or increased costs of doing business that could put pressure on their bottom line. A key area to watch is profit margins. If profit margins are shrinking, it means that even though they might be selling more, the cost of each sale is increasing, making them less profitable on a per unit basis. This could be due to rising raw material costs, increased labor costs, or greater competition forcing them to lower prices. We also need to consider the broader economic context. Are these financial results happening during a time of economic expansion or contraction? If the economy is booming and their results are weak, it could be a sign of internal problems. If the economy is struggling and they are showing resilience or even growth, it suggests a strong business model and effective management. We are always on the lookout for any red flags. Are their debts growing too fast? Are they burning through cash? Do their financial results align with what peers in their industry are reporting? Sometimes a company S-owned discussion and analysis can be overly optimistic or glossy. That is why it's important to look at the raw numbers and see if they tell a consistent story. From what we can see in these filings, AGM Group Holdings Incorporated is operating in a dynamic environment. The report indicates a focus on providing financial and operational updates to stakeholders. The crucial part is always understanding the trends. Are they steadily increasing their profitability year over year, or are there significant fluctuations that might suggest instability? We also look at how they are managing their assets and liabilities. A healthy balance sheet typically shows manageable debt levels and sufficient liquidity to meet short-term obligations. To wrap things up, AGM Group Holdings Incorporated's latest filing provides a snapshot of their financial performance for the first half of 2025. While the exact figures require a deeper dive into the attached exhibits, the purpose of this report is to disclose these updates to investors and the public. What we hope to glean from these reports are insights into the company's direction, its strengths, and its potential weaknesses. Are they growing? Are they stable? Are they taking on excessive risk? Ultimately, my take on AGM Group Holdings Incorporated based on this type of regulatory filing is that they are actively communicating their financial journey. The key will be consistent performance improvement. If we see a pattern of increasing revenue and stable or growing profits with responsible debt management, that bodes well. Conversely, any significant increase in debt without corresponding revenue growth or consistent losses would certainly raise concerns. We also need to keep an eye on any external factors that might impact their business, which is often hinted at in the management's discussion and analysis. It seems the company is aiming for transparency, and these reports are a critical part of that process. Alright, that is our deep dive into AGM Group Holdings Incorporated's latest report. What are your thoughts on these financial updates, and what do you think they mean for the company's future? Let us know in the comments down below. If you found this breakdown valuable, give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our growing community on Discord. It's linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.